All right, well, good morning, active traders, and welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun, your host from TradeMastery.com, coming at you live here on Saturday, September 10th, 2022. Markets have been in an uptick ever since the bullish engulfing manifested itself early last week. Wednesday, Thursday, and Friday were up days. The market's been, that's on the heels of a 2 or 3 week downtrend. So markets have been up and down. And one thing that we always want to pay attention to is our VIX to give us some heads up on what's likely to occur from a volatility standpoint. The broad markets, I'm going to use obvious 4,100 resistance, and I'm going to use 4,000 support. I'm going to play pretty tight. I'm going to start swing trading. This is my big tip. I'm going to write this down. And next week, let me know how much you could have potentially made had you listened. I'm going to start swing trading inverse ETFs on size if the market loses that 4,000, okay? That's the line in the sand is 4,000 in the S&P. If we get under and stay under that 4,000 for a day or two or more, it'd be a really good place to go into inverse instruments like SQQQ, UVXY, and SOXS. Those are my three favorite. SOXS, semiconductor short, SQs, the short NASDAQ, and UVXY, long volatility, long vol. So if the market gets under 4,000, that's going to be the play for swing trading in the upcoming week ahead. Now, if the market does continue to get buyers over the 4,100 on this chart, I'll be looking to go long things like SOXL and TQs, right? Those are the two long favorites I've got, SOXL and the TQs. That's the ETF backstory. By the way, trading, you should always have two groups of instruments. I highly encourage all of you to not only trade stocks if that's all you trade, but also look at ETFs, because a lot of times ETFs provide much superior swing trading opportunities because there's no chance of big adverse gaps. Unlike stocks that you have bad news or you have bad earnings miss or whatever and something gaps against you, ETFs and ETNs do not gap significantly compared to equities. So that's a really big safety net that I count on as an active swing and day trader. So swing trading, I much prefer ETFs, even though I swing trade both, but I like ETFs because they don't have major gaps. That reduces my unknown risk that's out there compared to stocks that could gap up multiple points or down. Okay, so that's one thing. The other thing is trade both stocks and stocks and ETFs for volatility. Now let's take a look at our VIX. If you take a look at our volatility index, you can see, does that make sense? It's kind of a safety net. I used to trade just all stocks, right? And then I started nibbling at ETFs, and now I trade more ETFs than I do stocks. I'd say my order flow is roughly, I can't guess, I would say somewhere roughly 70% ETFs and 30% stocks. If I were to guess, I haven't gone through my statement lately, but that's what I do. The volatility index has been down. Yeah, the key level for the VIX is 24, okay, 24. And we just lost that on Friday. But if the VIX gets over 24, we want to, again, look for a bearish reversal in the market. So that's the other key specific technical signal I want you guys to all pay attention to. Does the VIX get over and hold over 24 for any length of time? And if it does, bears are back and the market continues to sell. And if the market stays under, and I'm going to use 22 as support. So the VIX band, my strategy, I use the volatility index. I use kind of a banded approach. Where support, and just like for the S&P, we've got support and resistance, a bracket, if you will. The VIX I'm using really tight. If the VIX gets over 24, it's an inverse type indicator. So the VIX goes over 24, we're short bias, bear bias, bears are back. Or if the VIX gets under and stays under 22, then I'll have a bullish bias. So make sure that you have the 22 and 24 VIX marked out, or at least pay attention to it come early next week. Now, if we look at some of the swing charts, we're going to look at day trading charts in just a minute. A lot of them are starting to pivot back upwards. And some of these have had really good upside moves just yesterday, like Peloton. I bought some Peloton on Friday. I went long Peloton. I went long a lot of these things because they're starting to pivot back up. And one of the key patterns that I look for off of a base is I like to see increasing volume on an uptick. And the other pattern that I like is kind of like a 1-2 punch. You got a small green candle followed by a large green candle. Hey, John, if you have a question, I don't answer hands, but type it in chat and I'll answer any questions. But I look for a small green candle followed by a large green candle off of a support base with increasing volume on the right side. So I think Peloton may be a good, at least I bought a little bit. Again, by a little bit, I mean, I only bought like 50 shares. I start off with these little tiny, what I call pilot or test trades. A lot of times they're just bookmarks to remind me to trade the thing, so it's in my account. But I will often start my swing trades off with under $1,000 worth of the underlying. So like 50 shares of a $10 stock, or 70 shares of a $7 stock, or under $500 or $1,000, and then I martingale in or scale in with position sizing for those that work out. And for all the ones that don't work out, it doesn't bite me in the ass because, well, not much, because it's a small initial trade. So start small and then snowball, right? Trade small, trade often is a good idea. Anyway, small followed by a large green candle here. Let's see. The question: if we get over 4,100, will tech rally more? I don't think tech is kind of the laggard of the bull, and I think the way to go long is to focus. If you are going to go long stocks, I want you to focus on, or at least I'm going to be focusing on defensive plays like utilities and healthcare. I think utilities, healthcare, and energy, those are the three strong sectors. Utilities, healthcare, and energy. If you're going to go long stocks, I'm staying away from the tech. I think tech's horrible. When I was doing a presentation for Money Show, I mentioned a really good energy play for all of you who are fellow Oxy-Pete traders like Mr. Warren Buffett, as Oxy-Pete had run up sharply earlier. Anyway, if we take a look at some of these charts, DraftKings starting to bounce, US Steel, a nice recovery right off the base. Uber's kind of driving off the parking lot up here near 32, 33 with a bearish cup resistance at 33. Bitcoin play Marathon currently up near the 14. I like the fact that it's in a kind of a pullback and a recovery uptrend. So Marathon and the other Bitcoin plays like Coinbase and Riot, blockchain may be good. NEO's interesting, and meme stock AMC also on the radar as well. Now AMC really got hammered, right? It went. I know a lot of us were trading and following Bed Bath and Beyond last week, right? But in addition to BBBY, you also want to trade or look at things like AMC and GameStop and some other meme stocks, because when the WSB gang gets a hold of them, they can run. So keep an eye on this. This is coiled for an upward breakout in AMC if it gets over the 10. Remember, I said that next week when it's up at 12 or 13, and I'll say, see, I, in a friendly way, told you so. It might bounce. So keep an eye on AMC as well. One that's kind of oversold, or potentially oversold, that I'm in right now is GDXU. I think this is a good bounce. I've been teaching my traders exactly how to put together a trading plan designed to capitalize on recovery plays in both commodity ETFs like the oil and natural gas inverses, and gold, which has been sold off for so long, it's finally starting to pivot back up. And GDXU is a good example of one of those that we cover in the live room for recovery, swing, and intraday plays. And just a quick reminder, if you're not yet a live room member, you may want to go to trademastery.com/live. We recently raised our rates, but they're still very reasonable. And you can try us out at the Trade Mastery site for the live room. And it's available to us 5 days a week. We meet together starting at 8:30 in the morning for early birds. You don't have to show up at 8:30 if you don't want to, but I'm there at 8:30 going over the day's hottest pre-market charts for those who do pre-market, and in-market charts for those who want to, as normal, trade both day and swing trades on the open. So we also meet in the afternoon, and that's one time where I put on my own swing trades, and I teach traders how to evaluate and potentially put on swing trades, entries, and exits. And we do that in addition to end-of-day short squeeze plays and breakouts for day traders. We always cover that between 3:30 and 4. And also we cover, I usually stay around till at least like 4:10 or 4:15, going over different swing trade ideas as well. So and that's 5 days a week. So we're expanding our coverage in the live room. We have so many new members on board. I wanted to welcome you guys here. So anyway, trademastery.com/live for the live room. Okay, and that's enough of a sales pitch for today. Let's wrap up by looking at some of the day trading charts, and I think we're going to get an early finish today. So ISEE was a good one, and I know, John, I don't cover futures. I don't trade futures or options. I'm a stock trader. It's what I do. It's what I do. I'm a stock trader. And when ETF, probably more an ETF trader than a stock trader, but I trade both. But I don't trade futures. I don't trade options. I trade the underlying. It's my specialty. I traded millions of dollars worth. That's what I do for a living. Anyway, ISEE had a really good breakout. This is a good example of what's called a follow-through open range breakout play. Open range breakout, a term originally coined by Tony Crable, characterizes the big spike up that we often get between 9:30 and 10. And this is a perfect example of a winner for our members. I called along at 18.7. You can see, by the way, I often put these specific entry prices ahead of time here. And these are I added later in the day, but 18.7 was our trigger for ISEE back pre-market before the market opened. I said, hey guys, let's consider going long at 18.7. And it ran all the way up to 21, whole number resistance. I also specialize in using whole numbers as very easy, not only targets, but entry criteria for our charts. So we're able to help you identify the strongest charts each morning and do so in a very intelligent, focused, step-by-step way. I used to be a corporate statistician for the Ford Motor Company. I'm a UCLA graduate. I have a blue-blooded, corporate Fortune 500 training and development background. So I'm an expert both in trading and in teaching people how to trade. So I'm not one of these Yahoo random people without any degrees or backgrounds out there teaching traders. I've got the credentials. I am a money show speaker and an award-winning stocks and commodities columnist. You may have seen my Trading on Momentum column at traders.com, technical analysis of stocks and commodities magazine. Anyway, that's an ORB, open range breakout. Go long right over 9:30, sell it right before 10, and boom, nailed it. ISEE, what a run, what a play. Another one that one of my very smart traders had mentioned. A lot of times the best charts of the day, by the way, come not from me, but from my traders. I got a ton of smart traders in my room, which I'm really proud of them. They're really good and they're really intelligent people. So I really appreciate very heartfelt thanks to all of you in the live room who contribute charts like this one. This chart, VERU, Victor Echo Romeo Uniform, VERU characterizes the type of play called an buy the open, sell the close. Buy the open, sell the close is for all-day momentum runners. And of course, we don't know ahead of time if it's going to run all day, but one of the strategies I teach is do a couple of trades. You may want to do an open range breakout day trade and also initiate a intraday swing, which is a buy the open, sell the close play. And that's where you, very simple strategy. And I teach this in my live room is we go long right above the opening high at say 9:30, 9:35, whenever it hits, then put a hard stop right under support and then just leave it alone until it runs up into lunchtime, at which time we tighten the trailing stop. I teach exactly where. I'm not going to give away where for free here, but in the live room, I teach exactly where to trail the stop, and then into the close. That's where we sell between usually around 3:30. I would take profit at 3:30 or so. If it runs up a little bit further into 4, good for it. But this is a really good example of buy the open, sell the close, and that way you don't have to navigate or get right. It's so frustrating trying to day trade within the choppy. Oh, fake out, and then I get in, and then it runs, okay, and make a profit. Then I get faked out again, then I run, make a profit. Instead of all that, you can simplify your approach by buying at the open around 9:30, 10 at the latest, and then selling around 3:30 or 4. So, and it's also a really good strategy for those of you considering transitioning to day trading or adding day trading to your active trader skills. If you're a swing trader who's curious about day trading, but all you've seen out there is these morons who say, let's day trade thousands of shares of low float under $10 stocks, like a video game kid with hotkeys. That's a amateur's approach. That's not how professionals trade. The professional trader is much more conservative, and how to say, you don't have to hotkey in and out of trades with this approach. This is a good kind of a hybrid between day and swing trading, intraday swings where you buy the open, sell the close, and that's one thing that I exclusively teach in my live room at my trademastery.com live room site. So anyway, that's for those of you who want to do day trades but don't want to have to worry about split second timing. Like me, if you're like me, I'm almost 60. I'm getting older here. I'm 58. I'll be 59 in January, so I'm getting old. Anyway, I still do dozens of trades daily, but less than I used to. I like to put on trades in the morning and then sell in the afternoon, and that's kind of a more casual, potentially easier way to trade than split second scalping. So that's something you're welcome to learn and ask questions about with me as well. I mentioned that I bought some of this on Friday into the closed Pelotron. This is a good example of an open range runner that ran in the morning, kind of chopped around in the afternoon, but ended at a 2-day high. And this is a really good example of the type of swing trading chart I like, because it has a lot of upside potential, because it came down from so much higher and came down, and now it's getting buyers coming back in. One of the strategies you want to look for is buying into what's called a short squeeze. People who have been short Pelotron are getting squeezed out of that position. They're covering their shorts, so you've got buying pressure from the shorts that are covering, and you have buying pressure from guys like me who are buying speculative longs to try and make some money on the breakout to the upside. So that's another good strategy point. Let's see a question on UVXY. Personally, I think it will recover into the mid-teens at some point, but it may be a while. So what I do is I scale in and out. Whenever I'm swing trading, I start to scale out at 2-day lows and I scale in at 2-day highs. So that way my cost basis is always close to wherever the market's at. That's another quick advantage to learning how to swing trade. Good professional approaches. Let's say we buy this thing up at 1060 and 11 and 12, or whatever. The hard stop on this would be at, say, 860, right? So if it craps out, say, on Monday, it goes down to 9 and it crashes and burns, the market's selling off. Okay, we take a stop at 850. So use the 2-day basis to scale out, or at least start to like cut the position in half, and then another half and another half of each point down. And you scale in too when they start to work out. Let's say you're in the money and it's up at, say, 1060. I buy some more over 11 and then maybe over 12 and so forth. And so you scale into the ones at 2-day highs and you scale out at 2-day lows. So that's an important strategy. Let's see what else. A couple of day traders. That's the kind that's kind of often too hard to play for a breakout. So I don't like this kind of chart. Personally, I don't know about you guys, but I don't like charts that are vertical up or vertical down, unless it's sold off really sharply down and it's starting to bounce. I like that, but I don't like trying to chase equities like this. I like charts that have a more steady breakout pattern. Bed Bath was up, nice steady run. FCell was up, a nice sharp breakout on yesterday's session. And like I say, Pelotron was good. Vero was good for a all day long run. So there's something for everybody in my live room. I like to cover both the initial volatility momentum gap runners in the morning, as well as some of the more steady runners for a more conservative, easier to follow approach for those of you who are considering doing some day trades, but you don't want to do that hotkey in and out, thousands of shares of cheap stocks, blows up people's account, amateur moron type of approach. But you want a more intelligent, more professional approach. I like to cover what's suitable for those of us who like a more leisurely approach to day trading and not the frantic hotkey approach. So it's an intelligent way to approach this. I've been day trading since the late 90s full time. I founded the original day trading university back in the 90s, and I've been doing this for a very long time. And unlike all of my competitors, I have a 1099 tax return proof from last year, 41 million worth of order flow from my Fidelity account on the front of the trademastery.com site. And a lot of great reviews on Trustpilot too. So the point is, learn from people who have tax return proof that they really trade. How many of you would ever learn from an educator that won't even show you a 1099? I mean, again, you cover up your social security number, your TIN or whatever, so for security. But how many of you agree that it would be a good idea to require, or at least for you personally, before learning from somebody who purports to teach how to trade stocks, they should be able to demonstrate that they actually trade with some kind of tax return proof? I think that's critically important. Without tax return proof, I would not even give any educator I wouldn't give them a nickel unless they can prove that they're actually a trader, because otherwise, a lot of them are just internet marketers, right? And that's all they do, is they do PowerPoint presentations and try and promote with each other and all that kind of stuff, but they don't really trade. They're marketeers, and you don't want to learn how to trade from a marketer. You want to learn how to trade from a dang trader like me. So it's like 80% trader, 20% marketer. The other guys are like 90% marketer, 10% if that trader. That's a big difference. Make sure you learn only from people with tax return proof, a 1099 or what is it, 5898, whatever, some kind of proof that they're an actual real trader like I do. So I think that helps. All right, what else? Okay, oh, thanks, Bill. It's Peloton, not Pelotron. Okay, I don't know. I don't ride those dang exercise bikes, but thanks. Peloton, okay. PTON. Let's see, question. On Soxel and TQs, how do I handle the volatility and movement? They move up and down so quickly, I can get stopped so soon. I make a lot of money with Soxel on the days where I make money with it. I also make stops with it. I always use one trigger the other order. So for Soxel, I will use, for example, and Soxel's been choppy lately, but historically it's been a good player. By the way, this illustrates the concept too. Typically, volatility is, I know this is kind of a generalization, but volatility is usually best in the middle of the week, Tuesday, Wednesday, Thursday, especially Wednesday, and volatility is usually the lowest on Mondays and Fridays. And this is a good example of that. SOXL had twice the range Thursday as it did choppy yesterday, Friday. So in general, I try to, so big picture, I will trade the index type, or I will trade ETFs less aggressively on Monday and Friday than I do on the midweeks. I trade whatever's gapping on whichever day of the week it is, regardless. But for ETF trades, I like to focus on the middle of the week. So that's one thing. And the other is to use one triggers the other orders. So I will, for example, I put in like an order like buy 1260 with a 20-cent trail stop. So it runs up to 13, 10, pulls back to 12.95. I take a small win, that kind of thing. So use one triggers the other. And I always use trailing or hard stops of 20 cents or less for instruments down under the $20 share range. And I teach how to do that in the live room. So a lot of good questions, and there's a lot of strategies and countermeasures designed to keep you out of bad entries and in on the ones that actually make sense for a change, right? What a welcome relief that is. So I certainly encourage each and every one of you to try the live room and join it or rejoin it as the case may be. I know a lot of you have been with me for years. I'm really pleased with the big turnout. We've got a really big membership in the room now. It's been very popular as people realize that day trading low float $3 stocks is for the birds. It's a very difficult way to day trade. I prefer a more easy way to day trade. I prefer more consistent charts to look at, charts that have more consistent runs rather than spike up and down, pop and drop. I hate $3 pop and drop stocks are for the birds. That's not how to day trade. That's gambling. I much prefer charts like the ones that I covered that can have a chance to run up a point or two or three, or at least a point or two, and you get 50 to 80 cents of it or so is a good target for a day trader. So anyway, and we also cover swing trades as well. So with that, I hope to see you in the live room. I wanted to wish you all the best for a fantastic week ahead. We've got really good volatility. I gave you the signals to use for both the S&P and the VIX and a number of charts that you may want to follow as well. So have a terrific weekend. I'm going to be busy putting in a new kitchen sink with my wife. So that's going to be a project, but a good husband-wife project. So I like to roll up my sleeves and get work done. So you guys take care, and hopefully the heat wave is broken too, right? So you too have a great weekend. Do I think oil goes higher? If it takes out the 2-day high, we'll see. I don't predict, I react. All right, take care, you guys, and I will see you in our next session. And bye for now, and trade smart out there. Play it safe because we've got an up and down market. So you want to react sooner rather than later. When in doubt, cash is king. When in doubt, get out. And when you have a good emerging breakout, it's good to jump on board, but also use a relatively tight stop. This is a market in which we want to use tight stops because of the whipsaws and the reversals. I teach you how to do that in the live room as well, with specific entry calls and specific exits squawked out live real time by me to all of you guys as we follow the charts. And you guys have seen how well the alerts have worked. So I appreciate your support and you're working with me, and I hope to see you in the live room. Register now at trademastery.com/live. And with that, microphone drop. I'm out. You guys take care. Have a great weekend, and I'll see you next time. Be safe out there in your trades and in life. All right. Bye for now. Take care.